Hey, what's up everyone? It's Mr. Fired Up Wealth here. Today we're wrapping up our top 25 stock picks with our fifth video, which will cover the top 5 FinTech stocks for the next decade. Now, FinTech is important because it democratizes financial services, making it cheaper and more convenient for the average person to perform basic financial tasks. There's also growing evidence that FinTech is at least partly responsible for the shrinking number of people who are unbanked or underbanked, defined as adults without access to basic financial services such as bank accounts and alternative means of payments beyond cash. The World Bank recently reported there are still 1.7 billion unbanked adults across the globe, which is a large number for sure, but far less than the 2.7 billion unbanked population back in 2011. There are many benefits to financial inclusion. The World Bank cited studies from around the globe in its 2017 Global FinTech database that showed that people who had access to bank accounts could save more, invest in their own businesses or farms, and spend more on things such as education and more nutritious food. FinTech is disruptive and convenient, and it's a huge secular growth trend that you need to be a part of. Now, some of these picks may seem obvious, but there's at least one wild card on the list that you might not know about, so stay tuned for that. I'll also cover several bonus picks and some fringe-related FinTech picks at the end of the video, so please do stay tuned. Without further ado, let's get started. Number 1 on the list is Visa, stock ticker V. Why? Well, haven't you seen the commercials? Visa, it's everywhere you want to be. Visa is the most dominant financial technology platform, and it operates the world's largest payment network, which has over 3.3 billion cards used across the globe. The company processes an enormous 190 billion transactions per year. This has enabled Visa to benefit from very powerful network effects. In other words, the more people that become part of the system and use Visa, the more attractive it is for merchants to participate. And as a result, it's extremely difficult for other companies to compete with Visa. Besides Visa, only MasterCard, American Express, and Discover Financial Services have credit card networks in the United States. Visa also continues to innovate by investing heavily in R&D. As an example, they recently created Visa Direct, which enables payments to be sent to credit cards. Additionally, Visa has tokens, which are used for digital payments. This has proven to greatly reduce fraud, and it's also very convenient. Visa also owns equity in companies like Square, Payworks, Stripe, and Solaris Bank. Even though I like the stock, Visa does have several risks to be aware of, most importantly being regulatory risk. Businesses have lobbied in multiple countries, including the US, to convince regulators to reduce Visa's fees. If successful, Visa's bottom line would definitely be negatively impacted. In addition to regulatory risk, competition is heated up in the space, most notably in alternative payment products such as PayPal, Alibaba's Alipay, and China's WeChat. Facebook is also attempting to create a cryptocurrency called Libra, which uses blockchain technology. Libra is expected to hit the market next year, and their focus will be on consumers who don't use banks. If it catches on, Visa's stock price could negatively be impacted, since Facebook already has a user base of 2 billion people. Visa's stock price is also quite expensive, pushing a PE ratio in the high 30s. With all that said, though, I feel that Visa's pros outweigh the cons. Visa is the largest credit card company, and as long as they continue to innovate, they should be around and do well for a very long time. I would consider adding Visa, stock ticker V, to your portfolio for outperformance. The second stock on the list is Square, stock ticker SQ. Square has been one of the most disruptive companies in finance over the past decade, advancing the mobile payments market and adding services that make small businesses easier to run than ever before. The company isn't profitable yet, but it has built a $28 billion market cap that may only be scratching the surface of its true potential. Square recently hired a former Alphabet executive, Steve Lee, to run its Bitcoin platform, and needless to say, crypto enthusiasts are very excited. And so is Square co-founder Jack Dorsey. He considers Bitcoin the native currency of the internet, and the internet to be bigger than any nation state. Therefore, he believes Bitcoin will become a global currency. Dorsey is also down on cash, and he expects apps like his own Square Cash to replace it. This is primarily why I like Square, for Square Cash. Nomura Research says that 2.2 million downloads of Square Cash were made in May, which is even more than PayPal's Venmo. With Square Cash acting as a bank account and Bitcoin becoming a global currency, Square is aiming for the purchaser side of transactions. Not just the merchant processing side, it's also hoping to get past its transaction processing rivals, jumping ahead of Visa with its own processing system. Add other exciting areas like Weebly, which helps businesses create websites easily and sell goods, and you have a long-term winner. Weebly has over 12 million websites, and there's amazing growth potential left with this platform. Take a look at Square, stock ticker SQ, as a long-term hold in your portfolio. Okay guys, time for a curveball. Are you ready? Number 3 on the list is Green Dot. You might ask, what is Green Dot? Green Dot Corporation, stock ticker GDOT, I'll call it GDOT, is a financial technology leader and bank holding company with a mission to power the banking industry's branchless future. By market capitalization, it is the world's largest prepaid debt company. The company is also well known for its payments platform, also known as BaaS, or Banking as a Service, which is used by Apple Pay, PayPal, Uber, and Intuit. Since being founded in 1999, GDOT has acquired a number of companies in the mobile, financial, and tax industries, including Loops, AccountNow, AchieveCard, UniRush, and TPG. GDOT's prepaid MasterCard and Visa cards are available at nearly 100,000 retail stores, including CVS, Rite Aid, Walgreens, Dollar Tree, and Walmart. Green Dot also helps people transfer direct deposit funds, such as Social Security payments from the United States government, to personal bank accounts. Lastly, GDOT also provides co-branded card programs with large companies such as Walmart, Boost Mobile, AT&T, and Citibank. Great, so why should Green Dot be on your radar? Besides what was mentioned earlier, they have recently made significant investments in both their products and platform. While this has impacted the business in the short term, I feel these investments bode well for the long term. The stock, which is down sharply year to date, should recover when these investments begin contributing to the company's top and bottom lines. Green Dot announced their plan to invest $60 million in 2019 to market new products and develop new BaaS 3.0 and BaaS 4.0 technology platforms. These significant investments are expected to deliver revenues ranging between $200 million to $300 million by the end of this year, 2019. To put that number into context, GDOT's 2018 revenue was just over $1 billion. An additional $200 to $300 million in revenue would be significant, in the approximate range of a 25% increase. This is very significant, and all these things are great, but the primary reason I feel that Green Dot has tremendous upside is because of Apple Pay, which is why I personally invested in GDOT stock. As of late February 2019, 43% of global iPhone users have enabled Apple Pay. This is a 36% increase from September of 2018 and a 20% increase from December 2017. Apple confirmed that their iPhone install base is 900 million, which means 383 million people have activated Apple Pay. This number represents an amazing 135% year-on-year increase. Over the past several quarters, Apple has discussed their focus on services, and these numbers should continue to grow. Services are the future of Apple's growth and sustainability as a company, and I believe that they will succeed in this area through their loyal and often fanatic customer base. Additionally, the availability of Apple Pay internationally is growing significantly. In February 2019, Apple Pay launched in the Czech Republic and Saudi Arabia. Apple Pay is actually used less in the US than in other countries. Only 12% of users are in the United States, compared to 88% elsewhere. 47% of iPhone users outside the US have used Apple Pay, compared to 24% in the US. I believe that the number of people using Apple Pay will continue to grow as additional businesses and retailers, universities, municipalities, and public transportation systems enable automated payments, and people begin to think of their phone as their wallet. Obviously, partnerships with other companies such as Uber and PayPal also have tremendous growth potential, but if Green Dot is successful with their investments in 2019, this stock can certainly take off from here. As always, please do your own due diligence before investing, but I like Green Dot, stock ticker GDOT, as a long-term hold right here. The fourth stock on the list is PayPal, stock ticker PYPL, which is one of the leading digital transaction companies with an array of services and apps that allow users to easily make purchases online. I've been a member of PayPal since 1999, over 20 years, and I love their platform. CEO Dan Schulman believes that the digital payments market will eventually be worth over $100 trillion, and PayPal's early lead in the space gives it a leg up over its competitors. They just reported earnings this week, and PayPal's revenue for the quarter rose to $4.31 billion, up 12% from a year earlier, but still below expectations of $4.33 billion. Adjusted earnings per share came in at 72 cents, and PayPal ended the quarter with 286 million active accounts, up 17%, including 23 million active merchant accounts. Even though they missed earnings slightly, PayPal's dominance in the digital payment space isn't going anywhere anytime soon. You have to remember the stock was up 44% year to date, so a 5% pullback isn't shocking. It's not just online payment services that make the stock worth considering. The company is also moving into new digital payment markets as well, primarily with its Venmo app. Venmo easily allows users to transfer money to each other for everything from splitting a restaurant bill to paying the babysitter. PayPal is also expanding Venmo's reach by allowing merchants to accept it for mobile payments in their stores. Venmo has more than 40 million active accounts, and in the most recent quarter, they processed $24 billion in total payment volume, a 70% increase. With the company's strength in the digital payments market and its efforts to expand into P2P payments, PayPal appears to be poised to continue benefiting as e-commerce continues to grow. I like PayPal for the long haul, and it's one that you should consider as a long-term investment. The fifth stock on the list is MasterCard, stock ticker MA. This company is very similar to Visa, which is also focused primarily on traditional credit card transactions. MasterCard is the clear number 2 behind Visa, and their recent growth has been off the charts. Both Visa and MasterCard each operate a global electronic payments network, making them vital middlemen between merchants and consumers. Each company earns a small fee every time a payment is made on its network. And with billions of cards in circulation and trillions of dollars flowing in their networks every year, small payments add up very quickly. MasterCard is a great stock, and many would argue that it's a stronger long-term play over Visa because of its consistently higher volume growth, its higher international mix, and its faster earnings growth in recent years. Although these stocks are both very expensive, both Visa and MasterCard are no-brainer long-term holds in my opinion. I would consider adding both stocks to your portfolio for long-term holds. Okay guys, there you have it, the top 5 FinTech stocks for the next decade. And this wraps up our top 25 secular growth picks. If you haven't watched all 5 videos, please go check them out. Before we go, I promised you a handful of runner-ups, and I'm going to name those now, but I'm not going to cover them in detail. If you want me to make a video on any of these, please let me know in the comments below, and I'll consider making a video on them. The bonus picks are Discover Financial Services, of course, American Express, Alibaba, Blackline, Shopify, and Guidewire. Also, if you're looking for a FinTech ETF, check out the stock ticker is FINX, FinX. That is an ETF which has many of these stocks listed today and several that you've probably never even heard of. I've had a lot of fun making these videos, these 5 videos. They've been a lot of work, they really have. I put a lot of time into the research. I feel like I make multiple takes to make sure it's perfect, as good as I possibly can get it. I hope you have enjoyed these videos. I plan on making some more videos in the future. I would love any ideas that you have. Please go ahead and comment below. Also, if you haven't subscribed, please do subscribe now. Hit the subscribe button on the lower right. There's also a little bell that you have to click so that you get notifications. Please remember to do that. But if you could throw me a like, go ahead and subscribe to the channel, maybe give me a comment. Certainly helps motivate me to continue to make these videos. I do obviously have a full-time job, and I spend a lot of time researching stocks for my own personal benefit, and I make these videos to try to help others. Obviously they're free videos. I'm just trying to simply share some of the knowledge that I get through hours and hours of research. So hope you enjoy the videos. If you do, I appreciate support. Please subscribe. I hope to see you guys very soon. Have a great rest of your week. Have a great weekend, and we'll talk to you very soon. Take care.